Well, joining us right now to talk more about that is Chief Market Strategist at Crossmark Global Investors, Victoria Fernandez. Victoria, good to see you. Thanks so much for joining us.
Good morning.
Do you agree with that notion that it's justified to see some of these valuations in tech accounting for so much of the S&P's rise this year?
Yeah, they've had a really good run. I mean, year to date, technology and consumer discretionary are your top two sectors that have been performing. They've come back a little bit over the last month, but they've still had a really good run. We would actually take a little bit off the table right now from some of these names because of that strong run that they've had. I think you can say perhaps it's justified, but I'm not sure it's going to continue at the same rate that we've seen in the past. I know we have some more companies coming out this week on earnings, a lot of them tied with Amazon, and since Amazon has done really well, perhaps we see continued strength there. But I think we're seeing a little bit of a turn in some of the technology names.
Even Apple, it's Dagan McDowell. Apple being hitting an all-time high, fourth straight record close on Friday. Best performer in the Dow so far this year, up nearly 29%. You would take some money off the table even with an Apple, which again seems to surprise the naysayers at every turn.
They do. They always seem to come out and surprise. Everyone wants to say that this is going to be the quarter that they don't do well, but they seem to surprise every time. If you look at the iPhone 10 sales, there was a huge surprise with the amount of sales that they had there and the margin that they have in those sales on their last earnings call. So I think there's always a surprise element for Apple. They're now more in that software kind of business and the services business than the hardware. And now they're looking at doing their own content. So they're going to start competing more with maybe an Amazon and a Netflix than what we've seen in the past. So I think there's some different metrics. Maybe we're going to have to start looking at Apple and see how they do, how that's going to affect their margins going forward. So I probably still would take a little bit off the table.
Victoria, when you say that, well, when you look at tech and you said look at different metrics, a lot of their earnings, when you talk about Amazon, Apple, Microsoft, a lot of that had to do with their cloud business. And I was just curious because we saw in the last earnings reports how much of the revenue was contributed by growth in the cloud. How much more room is there for growth, or is that coming to a peak?
You know, I think there's still some room to go. We saw it with Microsoft. That's where some of their largest growth was. There was actually an article in the Journal not too long ago that said technology companies were going to increase their R&D by about 24% over the coming quarters, and their CapEx by almost 50%. A lot of that is going into building out the cloud. We see it with some of the other names as well. So I think you've still got some room to go there, and obviously Amazon leading the way.
Yeah, I mean, you know, we've been waiting for capital spending to really pick up. The Trump economic policy of lowering taxes as well as rolling back regulation seems to have sort of unleashed these animal spirits. Toby, what's your take on the broad economic backdrop right now?
Well, I think you're going to see tremendous growth in the cloud. I expect to see it go up 20% over by 2020. It's just think about the huge amount of data there is in healthcare. The total amount of knowledge and data in healthcare is doubling every 73 days.
Wow.
And we can't manage any of that without the cloud.
And of course, with healthcare, it's that much more sensitive to the privacy issues around technology.
Oh, the privacy
issues.
Yeah, but I think the privacy issues are really going to be handled pretty well by the cloud as they go forward. So you saw last week that IBM, Microsoft, and Amazon and Google all came together, beginning to think that they can now have the interdisciplinary communication that is going to have be able to use the data to come together much better than ever before.
Really incredible. I mean, you said it was doubling every 73 days.
Yeah.
The amount of data in healthcare is doubling every 73 days. So that's one growth area in terms of the economy, Victoria. Is that where you see the growth? Are there areas within this economy that you see growing more so than others? I mean, look at the cloud business, what Toby's talking about.
No, I think that's true. And to take a step back, Maria, what you were saying about CapEx, that's a key component for us on where we're looking to invest. CapEx is growing. Even the small business survey that came out last week said the trend is higher in CapEx for small business. We know that increases productivity, and we saw the productivity numbers go higher last week. And that's what potential GDP is, right? It's growth in your labor force, which we're seeing, and it's growth in productivity. So I think if we have those numbers flow through, then you've got to look at your industrial names as well, some of your manufacturing names. I think you're going to see some growth over the coming quarters there.
And I attributed that to some of the economic policies. Let's take a look at the administration's economic impact, because according to a new survey of economists, 7 in 10 say that the president's tax cuts are, quote, too stimulative because of the impact on the national debt. More than 90% said that the administration's tariff policies would actually hurt the economy. Your response to these numbers, even in a strong backdrop, you've got now worries about being too stimulative.
Yeah, you do. And you've heard a lot of people worry about corporate debt as well that's coming out, along with the fiscal stimulus that we have and how that's going to affect us going forward. I think a lot of the concern, though, is coming from the tariff and the trade issue and how that's going to raise prices. That's going to flow through to inflation. Again, we already have some positive news, perhaps China talks coming this week, that may pull back a little bit. We do have to be concerned about our growing debt. And obviously, we have things like Social Security and Medicare that need to be addressed. And that's always a very difficult issue. And so I'm not sure how far into that we will get, but we do need to be careful with stimulus packages going forward.
But Uncle Sam can still borrow at less than 3%, actually less than 2.9% a year, yes, over 10 years, number one. So no fear, no real fear showing up in the Treasury market. And number two, it's worth pointing out, this was last week, the CBO came out with its projections, its GDP projections that our economy will be about $4 trillion larger than was projected in January of 2017. And that's in large part due to the president's policies of cutting taxes, of really stimulating growth, which many said was impossible so deep into this expansion.
And we've been waiting on wages. Another survey said that workers are about to take home their biggest paychecks in a decade. I know that sparks all other worries about inflation. But
well, you got to be careful with the wage part of the equation is what hasn't really grown. We've seen year-over-year wage growth of 2.7%, but inflation now in July year-over-year is 2.9%. So the people, the hourly workers really need to see their wages grow for all of this to get the big bang. The extra spending we're seeing on credit cards, it's not keeping up with inflation. So some people read that as a good sign. But if people are buying things on debt and their wages aren't keeping up with inflation, we're setting up for a problem.
With all due respect, this is a talking point that you're starting to hear from Democrats, from people who are on the campaign trail that, well, inflation is outpacing your wage growth.
It's too stimulative.
By some other measures, wage growth is 2.8% year over year. And your PCE, which the Federal Reserve looks at, is 2.2%. And, of course, energy prices would be elevated during the summer, as they are every year. So look at inflation in the fall and look at some other inflation indicators, because that's not what people are talking about.
And the last few months of PPI and CPI, it's basically nothing.
At the end of the day, it really is about what's in someone's pocket.
Right.
And if people are spending more on credit, that means they don't have maybe quite as much in their pocket. That's what I'm saying.
Any thoughts on this, Toby?
And debt service is still low as well.
All right.
But I also think you're seeing the tremendous change in what the occupations are. I mean, right now, the health education, our health has grown up to 20% of the employment, while manufacturing has gone way down.
Yeah.
That's a major change. And with the economic pressures on health care, these people aren't going to get paid as much.
And that requires a different skill set and training in healthcare. So the onus is on business as well as, I guess, the academia to make sure our people are, armed with the right information to thrive in this economy.